Okay, this is session 6 of 6. This is the final of 6 sessions. However, this one has been modified to include the new features of optionality. It's a killer thing, and you'll see that about 3/4 of the way through this session. And we've also opened this up to the whole public to get them enticed to get the product. But just so you know, because of all the new people, we'll be covering some older material that a lot of you have already seen, but a lot of you have not. All right, now as far as questions, I won't answer any questions until the very end unless they're very compelling. Because it's too disturbing to people that are trying to follow the flow. All right. Quick overview of software. This is a quick overview of optionality. There you see the screen. I'll go over this fairly rapidly, but this is for new people that don't really understand all the little bells and whistles. The main function, of course, is the stock list, which you see there. It looks complicated and intimidating to new people, but it's really not that bad. This is just various columns for the various stocks. And as you can see, a little blown up there, you can do either long or short. Now, if you do short, you'll see scores in the second to last column. And I'll explain the scores in a sec. And if you click on one that has options, you'll see the option chain down here. And you can click on an option and see what they're going for, and it'll give you information on the right. You can also go ahead and paper trade the option. You get the options paper trader. And if you want to trade stock, you could, of course, do paper trade stock. This is the same paper trader account, as it were, that's in your PowerScan Stock Vision program. All right, now the heart of the list, of course, are the scores. And each stock, in addition to scores, gives you the hot and cold sectors. If the somebody says they're not getting any sound. That must be their system, because I don't see any other problem. Anyhow, yeah, I definitely have sound on my machine here. Okay, the green. If the ticker symbol has a green background, that means that's one of the top 3 hot sectors for the current session. If it's pinkish or reddish, if you want to call it that, that means it's one of the worst performing sectors. Now, you can sort by that column. You can sort in any one of these columns by clicking the column, and then you can sort ascending or descending by clicking it more than once. In this case, I sorted here by hot sectors, so you can see all the hot sectors. Or you can flip that and see all the cold sectors if you're in short mode here. See that, how I have that circled? You can also click this checkbox you see up there that says show only top sectors. That means that you don't want to see anything in the list except the hot and cold sectors. And of course, those will show depending on whether you have long or short selected. And of course, you have the chart when you click on the any one of these stocks. But also this traffic light. Everyone asks me about the traffic light. The traffic light simply indicates market direction. If the market is trending higher, it'll be a green light. If it's trending lower, it'll be a red light. It's really that simple. And it's just an aid. You know, don't take it as gospel. It's just an aid to give you an idea of the direction the market is moving, and it's fairly accurate. All right, how scores are derived. I've gone over this material before, but you cannot learn this enough. Remember, every stock has a score. Now, to understand this, go back to our original product from years gone by, which is PowerScan. PowerScan, you could generate either built-in or custom filters. Of course, a filter locates a certain pattern or setup you're looking for. And then they scan for various specific stocks. This has been the norm in our product line for years and years. The question all new people have is, which filter is best? That's a very funny question, because that's like asking what instrument do they use in a symphony, or what instrument is best, you know? It's confusing to new people, and even to older people that have been around for a while. You know, they get confused. There's all these filters all over the place. Okay, now we've taken a lot of that confusion and suffering away, because after massive backtesting, I mean massive, we narrowed it down to the filters that work best. 20 what I call bull filters looking for longs, and 20 bear filters looking for shorts. These things constantly scan all the stocks. And this is how I'm explaining how the Optionality-Pro actually works. It's constantly scanning all stocks, applying those 20 bull and bear filters to all stocks, and it comes up with a score. Now, here is how that score is computed. Now, this is where it gets really interesting. This is how it outshines PowerScan. Let's take the V-bottom filter. The V-bottom filter is one of the 20 bull filters that it uses. Now, of course, a V-bottom is when you have a stock pattern that looks kind of like that, like a V. In our massive backtesting, we discovered that is a super powerful setup, no matter how you look at it. However, let's just check this out. You see, all stocks are not created equal. Here's an example of a chart that has some really solid V-bottoms. Notice that every time it hits that V, it tends to rally right after that. That's the idea. Now, take this chart. When the V-bottom filter is applied in backtesting this chart, this is about a year or maybe about 8 months, where you see those blue squares is every place that the filter detected a V-bottom. All right? Now, that was 14 times it discovered a V-bottom in this pattern, in this chart. Right there, it failed, and that was the only time it failed to gain shortly after the V-bottom. In this case, the track record for the V-bottom for this specific stock is 13 wins in 14 hits. A win, by the way we measured this, a win is gaining at least 1.5% in the time period tested. The score, therefore, is 92.9%. Now, what that means is that in its track record, when the V-bottom filter trips, this stock has performed well 92.9% of the time. Notice that I said track record. It is paramount that everyone understands that this score is not a crystal ball or a fortune cookie. This probability is a track record. The score is a stock's track record when it is found by a filter. Now, you're thinking, okay, aren't they all going to be kind of the same? No, they're not, and that's the secret. That's the breakthrough of all this technology. Let's take another filter applied to a completely different stock. And these are real examples. These are real charts. This one, I'm showing all the places where the V-bottom hit. However, this time it had 15 instead of 14 hits, unlike the previous stock. But this time it failed on every one of those spots when the V-bottom filter hit. All right? In that case, this track record is 9 wins in 15 hits, which is 60%. Now, I don't know about you, but I'd rather trade the one that has 92% versus the 60. You see where I'm going with this? This is how the scores are derived, and this can really, really, really give you an edge. Remember, the score is the stock's track record when it is found by a filter. It can't get any better than this. Now, if you don't believe me, I made a record of what I call a blind portfolio. Our servers, ever since last November, I think, has been testing this theory, and it monitors all 2,000 stocks, and every time it sees a score of 90 or better, it pretends it trades those. And if it gains 1.5%, it calls it a win. It goes for 3 days, or when it goes to minus 3%, it says it's a loss. If it fails to gain 1.5% during that 3 days, it's a loss. So, considering that criteria, it's been tracking that since November, and here are the results. This is a spreadsheet that I made of these results. Now, these results only go to, let's see here. I don't have the most recent data on here, and the only reason I don't is because we had a data feed outage a few days ago, and it messed up some of the results. So, but believe me, the results are similar to these. These are going to, I don't have the dates on here. This goes to about mid-January. If you just blindly traded $1,000 per stock that it chose in this time period, which is about 2.5 months, you would be ahead $402. This is just blindly plopping $1,000 on every one of these guys. Now, and that doesn't count commissions or anything. This is just a statistical evidence that this thing actually works. What's interesting is, we've had this rally for the last few days. I actually looked at the results for the last few days, and of the 90% scores and above, in the last 3 days, not a single one has lost. It is the most amazing thing. Now, some of them are still being held, but it's been like 100%. So it's very interesting. Anyway, I thought I'd share that with everybody so it's evidence that the scoring actually means something. Now, it doesn't mean you just blindly trade those. I'll get into that a little later. Okay, the problem users have. This is all well and good, right? The scores and all. The problem users have is there's lots of ties. Like on really good days, good meaning the market's, ramping up, you're going to see a bunch of 99s or a bunch of 98s. They're all going to be tied, And that's an issue for people, especially those, the new user that wants a red light, green light thing. Because the most common question I get from new people is, Gar, does 92 or above mean that I'm supposed to buy the stock? God, I hate that question. And the answer is no. It means you're supposed to look at it and consider it. But you got to use your own analysis. You got to use, human judgment, because there's other factors that weigh in that are not computed in that score. For example, if the market is crashing, I wouldn't trade even a 99. I just wouldn't, unless that score was for short. You see what I'm saying? There's other factors too, which I'll explain here. The answer to how you break the tie is the training. We have these online training seminars every week, or just about every week, that'll explain how you do all this. It's education. You've got to understand how to break ties, how to know a good one from a bad one. There is no such thing as a red light, green light. It does not exist. Anybody out there who claims they have a system that'll just tell you when to buy and when to sell blindly with a computer program is either lying or they're ignorant. Now, I believe that humans can do that, and that's why we have the GAR's Gold feature, but I digress. But there's one helpful tip. If I had to explain one thing and only one thing about how you break ties, it's this. It's called support and resistance. Right here, I'm showing a typical support and resistance lines across the chart. Let me back up there a sec. You see, the most important support and resistance is the most recent data. And let me give you a quick example here. See right here, this green line, this is a support line right here. Let me change that color. Yeah, this is a support line right across here, because that's where the stock tends to bounce. You see, it bounced way back here, and it bounced right here. And there it is again, right? So more likely than not, this guy's probably going to move up this way. Resistance being right here, that's where the stock tends to sell off. Now, the one thing I try to teach everybody about breaking the tie or knowing when it's a false positive or not is how much room it has to run. In this particular case, it has a lot of room. If you like the stock as a long, as a good prospect, This one here has a lot of room to run because the next major support is all the way up here, you see. So it can run. Now, you could get really nitpicky and say there's a little tiny resistance line there. And in that case, it only has this much room to run, but still, there's still room to run. And I will give you some examples of breaking the tie right now. Let's bring up the optionality program. I see there's a lot of questions. I'll answer all of those at the end of the session. And so, you know, they're recorded. I will see them. Don't worry about it. Okay. In this case, we have two 99s and an 88. All right. And then an 85. I would say anything above 70 something or 75, let's say, is probably a decent score. So let's see if we can break the tie on just that information alone that I gave you. Let's take a look at this one. Let me get rid of that indicator. All right, now this would be a bad one, and here's why. Remember I said room to run? Your obvious support level is right here. That's your support level. Your obvious resistance level is right here. Why do I say that's obvious? Well, it's because that's where the stock sold off. That's how you know. You know, the first person says, Gar, what do I set support and resistance indicator to? You don't. I mean, you can if you want, but you just look at the chart. This chart shows that this stock sold off right here. And in fact, it sold off many times. It could not get through that barrier. You see that? So that's obvious resistance. Now, the reason why this is not a very good trade is because it only has a little tiny bit of room to run. You see my arrow there? That's all it has. So you can maybe try to scalp that gain if you want, but this would be a bad choice. So we'll skip that one. This one here, ooh, I really like that hammer. A hammer is when you have a long tail to the candle. I like that. Now, does this have room to run? Yeah, it definitely does, because looks like your resistance is right here. How do I know? Well, that's where the stock crashed. That's where a lot of people got holding the bag. And if you really want to get fancy, go back there. You see? The other reason I know that's resistance is because there's an old technical analysis thing. Old support becomes the new resistance. See, that used to be support. And when the stock was trading here the last few months, that was support, but it crashed through that, so now that's going to become resistance. But my point is that if that is resistance, this stock can move all the way up to there. That is a fat gain of, you know, several percentage points. So that's a good one. I would pick that one way over the first one. Let's look at one more. This is a terrible prospect because it's right smack on resistance. In fact, you could see it even tried to break through and then it snapped back. So that's a terrible play. No room to run. Let's look at one more then. This is also a bad one because this is sitting right. By the way, this is what I saw all day today, one after another like this, which is why I could not find a decent trade. But your resistance is there, and that's sitting right smack on that resistance level. That would be a terrible, terrible bet. This one here is better because your resistance line is right here. Well, that's kind of a technical matter because there's another smaller resistance right here. So that too is near resistance. See, every single frickin' stock was showing me this today, and this is why, if any of you who are watching my advisories, as it were, This is why I just, even though the market's ramping up, I didn't like anything. They all looked like this. This also tells me that the market is probably going to start trending downwards because they're all sitting on all right.
Welcome to GoToWebinar, Webinars Made Easy.
All right. Hope people can still hear me. I lost audio there for a sec. I think I lost internet connection. Yeah, I think we're good now. All right. Anyhow, I was saying that that today's market was terrible because every stock was hitting resistance. It seemed that way to me anyway. All the high scores were. Okay, yeah, we lost audio there for a sec, so I had to pause until I got it back. All right. Anyhow, that's the way, very generally speaking, the way you do it is you look at the high scores and you just decide if it has room to run. That's the way I do it. And then you can look at other factors. Depending on how skilled you are, you might want to consider other factors. So, let's get back to the show. All right. All that being said, I'm now going to show you a new add-on called Signature. Now, the reason this is I'm calling it an add-on is because soon, eventually, we're going to roll this into our other products like PowerScan, but it's not available yet as an add-on. It's only available on Optionality. There's a reason for that. It's because Optionality is our kingpin product right now, and that's why. Now, let me explain to you what this is. Remember what I said a little while back tonight. The way these things score is it figures out which guys hit and which didn't on these filters. Signature locates the characteristics of a stock measuring specific indicators against its recent history. Now, this is a little bit subtly different than what it's been doing already. Remember, it's measuring filters against all the stocks to figure out the probabilities of each stock. In this case, Signature locates the characteristics of a stock by measuring specific indicators against its recent history. For indicators, for example, two EMAs crossing, MACD histogram shifting direction, stochastic shifting direction, that sort of thing. Examples would be, yeah, EMA crossing other EMA, MACD histogram, an RSI forming a V at a support level, slow stochastic crossing, etc., etc., etc. Now, the reason we did this is because I have learned over the last few months that one of the best ways to trade is to choose a select list of stocks that you feel comfortable with and that you're familiar with their characteristics. In a couple sessions ago, I talked about that. I call it track trading or something like that. That's when you have a handful of stocks you like to get in and out of frequently. And I got to thinking, well, how do I know I can sort of learn the characteristics by staring at them, but how do I really know what the best indicator is for each of these watchers? This is the answer. because this will tell you how effective each of these indicators are against that stock. Here's an example of EMA crossing. Now, this happens to be an 8 EMA against a 15 EMA. I discovered that that is one of the best combinations just by trial and error and backtesting. Now, here's what's so interesting about this particular stock. Look how well it tracks with that cross. Right here, you have a cross, all right? Stock rallies like mad. I'm talking bull now, not bear, but right here you have a cross. Stock soars. In fact, that EMA line stays positive that entire time that this stock is rallying. We finally get another cross. We don't get another real cross until right here. And sure enough, the stock spikes for 3 days. We finally get one more recently, and the stock spikes for 3 days. So you see that. This is a phenomenal track record for this stock for EMA crossing. EMA is exponential moving average. All right. Now, I gave it just show an example here of a really, really good one, but they can be bad as well. And therein is where you want to know how effective they are. I'm now going to show you the actual feature in the product. In the latest optionality, you guys don't have this yet unless you've already downloaded, because I updated the download about half hour before this show tonight. But you look up here right under the Nagar's Gold logo, you'll see a thing that says signature. When you first launch the new version, it will make one signature file for sure, which is called all stocks. It will also copy any watch lists you have and make those into a signature file as well. What is a signature file? Well, if you select it, you will see up comes the signature file. This is going to seem complicated at first, but it's really not. What this is, I just selected all stocks. Let's just start by symbol to start. Now, let me explain each of these things. First of all, you can either look at long or short, just like your main list. But you can also select two different time periods, either daily or intraday. Intraday tested all of these ratings on a 15-minute chart. 15. I found by backtesting that is the optimum chart to get some good intraday action. And then, of course, the daily chart is what I usually default to if I want to hold for more than, half an hour. What you have here, let's forget the left column for a second. The column you're most interested in is this column here called Best Indicator. It might be hard to see for you guys, but it's 1, 2, 3. The fourth column in is Best Indicator. This tells you what the best indicator for that stock is per its track record. If you click on it, it will give you the full analysis. So I just clicked on A, stock symbol A, and it's telling me that this is Agilent Technologies A. Now the following, it says here, I'll read it to you. It says the following indicators are the top performers for this stock. The first top performer is sitting on near-term support or resistance. That's it. And it says it has produced a gain of about 70% of the time. If you click on this little link, it'll show you an example. See right here. And there's a little minor bug. It didn't hold my indicator. Let me turn it on. Support and resistance. I think it uses a 16 period. And by the way, this is a new feature in support resistance. It lets you enter a back bar, meaning where do you want to measure the support and resistance, from the current bar or 1 bar back or 2 bars back, etc. I put a 1 in there so I can see the support and resistance as of yesterday. Anyhow, Now, what's interesting about this stock is you see how well it responds to being at support. This is why it's got a high score. You see that green line is your support line. You see that? Look how beautiful that stock responds to being at support. It bounced there. It bounced really big there. And it bounced really big there. That's correct. That score is really accurate. Now, it also gives you the top 4 scoring indicators. Its second best is the 2 EMAs crossing, like I was just showing you. However, that one's only gains 46% of the time. That's a big difference. Your third best is a Williams indicator forming a curve like a V-bottom for at least 2 bars. That gives you a 45% edge. And then the fourth best is EMA, an 8-period EMA forming a V-bottom. That produces 37% of the time. So this is not a great stock for your second, third, and fourth indicator. But in the column up here, in your best indicator column, that gives you the best one for that stock. Now, on the far, let's go to the far left column. Notice that I'm now selecting this symbol AAN. Notice that there's a green background to this column called HIT. That means that this stock is currently sitting on its second best indicator. In other words, that indicator is true right now. So if the HIT column is colored, that means that that indicator is one of the top 4 and it's currently has tripped. In this case, you know that it's a number 2 because it'll say right there, you can see it'll say 2, parentheses 2, and it'll give you the time, the market time of when that hit. This is good too because if it hit an hour ago, you'll see that in real time. You'll see that it hit an hour ago. But in this case, it hit Williams forming a V or a curve. Sure enough, that's exactly what it's doing. If you look at this chart down here, it's hard to see, but there's a little tiny V that formed. That performs 66.66% of the time favorably. So if that was one of your watchers, you'd say, hey, you know, maybe I should trade that. The industry column, this is one of the only watch lists on the whole product will give you the industry, you know, what sector it's in. The background of that, the color background is the same as the master list. If it's reddish, that means it's in a bad industry for today. If it's greenish, that means it's in the hot sector for today. Anyhow, if you like a stock, and if it's in your watch list, let's say you form the best way to use this is to form a watch list, or one of the ways to use it is to form a watch list, and which you can do. Like let's say, for example, let's say I want this one. I'm just saying, all right, I want this one. I'm holding the control key down to select multiple. Let's say I want this as a watch list, all right? Let's just say. There's a button right here that says Clone Selected. If I click that, I call it My New Watch List, whatever. I now have this as a new signature window. That signature window will now be available every time you launch the product. Just like the main list, if they're greenish background, they have options. If they're bluish, they're only stocks. But here's how I'd use this. I'd make a watch list, let's say. You guys can spend a whole lot of time going through these and picking out ones you want to track and make a watch list. You could even set an alert. How do you do that? Well, let's say you wanted to alert you when this stock that I have highlighted trips on its number 1 indicator. You go set alert. You want it to be long. And right here you got check boxes, which is the first producing indicator, second producing indicator, and so on. You check which ones you want to be alerted by. Let's say I want to be alerted by the first and second. If you go OK, Now, in real time, by the way, that hit list now has an exclamation mark in it, which means you have an alert set. That'll be set forever. If any of those two indicators trip for that stock in real time, it'll scream at you and it'll bring it to the front. Yeah, I know somebody's going to say, Gar, why can't it send us an email or a text message? Yeah, maybe we'll do that in the near future, all right? But for now, didn't have time to do that kind of complexity. But for now, it'll fire an alert, a sound, and then come to the front. So you don't have to be glued to it. All right, now, if you go short, your best indicators are for the short side. In other words, for caving, for going down. And you can go daily or intraday. Intraday is very interesting because that's how you can do some really cool day trades to track. Now, what I like to do is I like to, just to figure out a good watch list, I like to sort by best indicator. I'm sorry. I just like to sort by rating. Okay, we're on the short side. Let's go on the long side. Okay, these guys here have 100%. Okay, which is kind of insane. Remember, that's track record. It's telling us this stock here, HST, which is some kind of real estate, REIT, I guess. It's saying that EMA crossing, the EMA 8 crossing the EMA 15 has produced a gain 100% of the time. That's pretty wild, isn't it? So put that on your watch list, man. Next time that sucker crosses, go in. It could work. Okay, I want to show you one other way to use this. This is really cool. That's used in conjunction with all the rest of the bells and whistles. Remember we looked at these guys on the main list? When you select one, you can click on this button right here, which is a new button that says Signature. If you click on that, it'll find it in your signature file and bring it up for you. It just did that, and it's telling me that the slow stochastic crossing and expanding for at least 2 bars has produced a gain of 66%. Is that true for this stock? I got to fix that, by the way. I want the indicators to come up when I open the chart, which I'll fix that later. Oh wait, we want slow stoch. Yeah. The answer is no. It is not crossing. So the number one indicator is not true for that stock. That's what I see. In fact, none of the top 4 producing indicators are true for that stock. You're thinking, okay, Gar, why is the score so high? Well, because remember, it's using filters for the score. That's a combination of several things, not necessarily its best indicators. But using these in conjunction, you can really get a nice edge with this signature info. And I'm going to show you right now how that helped me in the last couple of days. A really good trade that I demonstrated live was GDX, which just went out the roof. And I did an option. I sold way too soon, left a lot on the table. You know the whole drill, right? But it was an outstanding pick. But you want to know one reason I picked it? It had a high score for starters, but let me show you another reason. GDX, signature. Okay, GDX, its number one indicator is sitting at near-term support or resistance. First of all, it was sitting on support and resistance. It was sitting right smack on support just a day or so ago. Not only that, but its second, I don't know if you can read it on your screen, but its second producing indicator, it said breaking through support or resistance. Wins 62% of the time. Now, 62% is good enough for me. And check out the stock. When I saw that, I went, whoa, that's its number 2 indicator, breaking through resistance. Where is resistance? Right here. Okay? Well, it's almost there. It's actually about right there. Look how that guy broke through resistance, and that's its second best producing indicator. All right. Not only that, look how it even went up the second day, which is why I held. I held for 2 days because I knew it still had some room, okay? Now, I chose that one over others purely because of this new feature signature. Because when I saw that, I went, you know, this thing is liable to really fly. And by the way, notice that its number one indicator was not today or yesterday, it was a couple days ago, which you could have played it then. Its number one indicator is at near-term support. Well, guess where near-term support was in this stock? It's hard to see, but it's right there. See how it keeps bouncing off that support level? Well, there it was one more time, and sure enough, it took off like a rocket. Even as a day trade, you've got a nice win right there. Then when it busted through support, that was a no-brainer. All right. And the only other one, see what other trade is? Oh, yeah. BBRY short or put options was another nice winner. Let's look at that real quick. See how signature would have helped us. Okay, first of all, BBRY had a nice fat bear score. But in addition to that, folks, let's look at the short side, okay? The short side, its number one indicator was sitting at near-term support or resistance. 85%. 85% of the time that BBRY is sitting at resistance, it's going to crash, according to signature. And guess what? Where was BBRY when I traded it as a put option? Right smack on this resistance line. Let's be more accurate. It's right about there. It's kind of hard to see. Let's blow it up a little bit. Yeah. Move my line here. Yeah, there is your resistance. So according to signature, this was a great play because it was right on that line. And what do you know? It crashes. Doesn't look like a whole lot, but that's a fairly cheap stock. I believe we got a good 40–50% out of the put option. I'm just curious what the second indicator is for that. Slow stochastic crossing and expanding. I wonder if that's true. I'm just curious. Yeah, it's kind of true. Check it out. It's hard to see, but that stochastic line is turning negative right there when that stock starts to fall. Back here was another time that happened, right here. And it falls for like a day or two. So you get the idea. Don't, just like the regular scores in in the main screen, don't take the signature as gospel. Take it as a helpful hint, and this will really give you a nice edge. Let's see, did I miss any features? Well, I showed you a set alert. You could import a list, just like your watches. You could import a text file that has symbols. Just separate the symbols by a carriage return. Anyhow, let's go back to the show and see what else I got for you. One other new feature, which I talked about today on the forum, and that is this. Okay, let's look at two different options. For one thing, options, as you know, option trading, it's one liability. Options have every advantage in the universe except for one. That is, they decay. If the stock just goes sideways, your option will eventually expire and become worthless. That's the one downside to options. All other factors of the options are favorable. But now, here's what's interesting. Not all options decay the same. And obviously that's because of the strike prices. Here's a really simple example. Let's say the stock price is $20. Now, if the I'm sorry, let's say the stock price, not the strike price, the stock price trading at $20. If the stock stays the same and you have an option with a $21 strike price, at expiration it is zero. That's right, it's worth zero. Now, if your strike price is $20 and the stock stays at $20, at expiration, your option is worth zero. However, if you have a $19 strike price, at expiration, your option is worth $1. You know why? Because it's underneath because the stock is trading $1 above the strike. So at expiration, I mean, obviously not after expiration, then it's worth zero. But if you sold it on expiration day, you'd get about $1 for it because that's the intrinsic value. Now, this is a really obvious example, but my point is, is that if you were holding a $19 strike, you would not lose 100% if the stock was at $20. You see my point. Now, this gets a little more complex when you see a whole list of strikes and options. But I want to show you an example of, this is a real example taken from today's option list. BAC I chose randomly because it trades heavy options. BAC right now is trading at $16.87. Now, let's say that you decided you wanted to trade the March 7th $17 call, which is a little bit out of the money, and it's only 28 cents. Here's the deal. If the stock gains 1.25% by expiration day, this option you will lose 71% of your option. That's right. The stock gains 1.25% by expiration, you will lose 71% if you bought those options. If the stock loses 1.25% by expiration, you lose 100% of your option. Why does this even mean anything? Well, it's because of this. If you bought March 7th $16 call, which is 97 cents, that's a lot more expensive, right? However, if the stock gains 1.5% by expiration, we're talking holding it all the way into expiration, you've gained 11.43%. That's a pretty phenomenal difference, isn't it? Even though it's a lot more expensive, your risk is way, way less. Now, of course, if the stock loses 1.25 by expiration, you lose, but in this case, you only lose 32%. Now, that's pretty phenomenal when you think about it. Look at the difference in those two. Now, the temptation, of course, is to buy the $28 option, 28-cent options because they're cheap. But they're cheap for a reason, and these numbers tell you why. All right, one reason the 97 cents is so high is because it's in the money. But you're paying way less premium, and so that's why you end up getting less scathed. Let's show you one more example. Let's say you go really nuts and you buy the March 7th. Remember, these are all March 7th expirations. You buy the $15.50 call. That's really expensive. That's $1.46. However, this is what's interesting. If the stock gains 1.25% by expiration for this option, you gain 8.28. Not as much as the other one, but your losses are also not as much. You see? So the point of this is that this table will tell you what's the best bang for the buck. And you got to consider a lot of factors, like how big do you think the stock's going to move? How conservative you want to play the thing. I mean, there's no rule written in stone. The only thing I know for sure is this is way more horrible than any of these two. And if you want to have a lot of confidence in your option trade and don't feel like you're going to lose your ass, you want to trade these kind of plays, right? If it were me, like with no other data available, I would go, in this case, I'd go with this guy because it looks, to me, it looks like the best bang for the buck. Although I stand losing more than this third one, I could gain more too. Now, remember, this is assuming you held all the way to expiration. Of course, you're not going to usually. Because in this case, if BAC makes a nice big move, you're going to get out at a nice gain, right? But this table, the only reason it takes it to expiration is this gives you the worst case scenario. So you know what your risk is. You know what your disadvantage is. Some of you guys are going to like this better than the signature feature, but this is, by the way, one of our users. I borrowed it from him. He uses a similar method. Now, one of the things that's not in the table is volatility, and I've got to figure out how to put that in the equation. By volatility, I mean stocks tend to have way higher premiums if they move around a lot, and you got to factor that in as well, because some of the stocks you're going to look at on this table and you're going to think, wow, there's no good ones. They all look like losers. Well, not necessarily. I'm going to give you an example of that in a sec, but let's move on here. Because somewhere in the money is the optimum strike price for minimum decay, and that's the point. And I'll show you what this is about in optionality. When you click on an option, it'll tell you what that data is, just like I just showed you. In this case, we're looking at GDX. I'm looking at February calls and puts. GDX is trading at $25.64. Let's go here. If you click on any of these guys, let's look at the $25 strike. Let's say February 14th, which is at the end of this. Oh, let's look at February 22nd. Notice on the far right over here, we have new data. Right there, it says if plus 1.5% at expiration, you make 2.18%. If it loses 1.25% before expiration, or at expiration, you lose 66%. That's not too shabby, because remember, you're holding it all the way to the end. So the worst case, you'll lose 66% if it only falls down 1.25%. This is just gives you an idea of what your risk is. And then it gives you a 2% calculation. If 2%, then it gives you the numbers. In this case, if it gains 2%, you'll make 22%. If it loses 2%, you'll lose 86%. These are all ifs. This gives you a feel. Now, as you step through these options, you can see what the differences are, and that's really how you should use this thing. See, I'm looking at the $25 strike, which is already in the money about 40 cents. Let's say I go look at the next one down, which is $24.50 strike. You see that has a little bit better results. You get a 10% win if it gains 1.25% by expiration. Another one down. That one you're only getting an extra percent, and you're way deeper in the money, so that probably wouldn't be worth it, you see. And so on and so on. Now, here's what's really interesting. You're going to click on some of these. Like I'm going to click on this one, $25 for the 14th, which is like this Friday. Look at that. You're going to go, whoa, Carl, look at that. I get 26% if it gains 1.25. Yeah, but it expires Friday. Now, so you have to ask yourself, because that right now that is 60 cents in the money. You have to ask yourself, is it really going to make that kind of move by Friday? That's what you got to ask yourself. So remember, when you're clicking on some of these that are real close to expiration, they might show you some really nice gains, but keep in mind the other factor, which is, wait a minute, it has to make that move before expiration. So I don't have any rules worked out, like saying, well, you should only do this, you should only do that. But this table will give you a way better feel for how much confidence you can have in your trade. I mean, to me, it's nice to know that you have a certain parameter, a certain risk factor, so it's easier to sleep at night knowing that you're probably not going to lose 100% of that option. Anyhow, I hope that is clear as mud. And this show was called Tying It All Together because this ties it all together, these two features. Now, how do you get these new things? Well, okay. If you already bought optionality and you bought it recently, the cost is $0. All you do is just update. How do you update? Run the program. Run the program. It'll give you an alert saying there's a new version. Follow the path, download it, install it, and you're good. If you don't own optionality, I urge you, I implore you, I urge you to get it because it's our best product ever. And with these new features, it is better than ever. And we got lots of training videos, and we'll be doing lots of new live ones. Anyway, as a lot of you know, that we bumped the price up because it was too cheap. It's currently $3.99. However, from now, because of we're nice guys and because you attended this webinar, from now until this weekend, if you watch this webinar, the original price is available, including discounts, which is, the price is $2.99 until this weekend. Now, if you own GT Pro, the price is $1.99. All right. Now, when you try to buy this thing, it'll know, if you use your correct username, it'll know that you own GT Pro. It'll discount that guy $100 more. Now, if you want to do it, if you finally decided to bite the bullet and get this product, when you go to buy it, the promo code, there's a little box that has promo code. It'll ask you for your username, and right below that somewhere it'll say promo code. You want to type in HELD, H-E-L-D. That's the code. No quotes. Don't put any quotes in there like I'm showing there. Just H-E-L-D, lowercase. And if it sees that and recognizes it, that $2.99, I'm sorry, that $3.99 will go to $2.99. And if it additionally notices that you own GT Pro, it'll go to $1.99. All right? It's that simple, and that's the end of my show. I'm sorry for the choppy audio and internet connection. Nothing I could do about that. But I see there's buku questions. Let me try to answer them right now. All right, where do I start here? Somebody said V-bottom is known after the fact and you missed the signal. No. V-bottom means that it's already hit the bottom and it's starting to reverse. That is the signal. Yeah, by definition, all signals are somewhat after the fact. But the idea is that it'll keep going for a while. Same person is asking, when is a V-bottom signal triggered? It depends on your filter, if you want to do it yourself, like say in PowerScan. But in our case, our filter, it triggers, I think, after 1 bar. So it looks for like, I think, 2 or 3 bars going down, and then 1 bar up. It would consider that a V-bottom. Or in some cases, I think it might be 2 bars. But take a look at any old chart. Look, find a nice V-bottom. Notice that when it hits that, it tends to rally for like days. So it's no way it's too late if you spot a real V-bottom. What is the filter criteria to get to 2,000 stocks from over 7,000? Oh, you mean how do we get them down that low? The criteria is price and volume. Now, that being said, there's a lot of stocks in the master list that don't meet the criteria anymore. That's because we haven't updated the list for quite a while. When we update the list, we're talking about the master list now that's in all the products. When we update the list, we weed out everything. I believe it's under 500,000 shares a day average, and anything under $1. That leaves about 2,000 stocks. Leon asks, in general, for short-time trading, max 3-day, how many days would you use to determine support and resistance? Oh, gosh. It's not so much days as it is, it kind of is, but I would say it's more important to see how many times it bounced off that level or sold off at that level. Here, let me see if we can look at an example. Let's just pick any old chart. I gotta zoom out of this one a little bit. Hey, this is a good example, and here's why. I don't really care so much about number of days on this one, on a recent chart. It's more like how many times it failed, it bounced. See, in this case, if I draw a line right there, this stock bounced 1, 2, 3, 4, 5, 6 times off that level. So that tells me that the more it bounced, the more solid support that was. And same thing with resistance. Your resistance is right here. It failed to cross that line 1, 2, 3, 4, 5, 6 times. It finally busted through, which would be a really good setup, by the way. So in this case, how many buyers looking at? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Looking at about 12, 13 bars. If you want to know the answer to your question, I like 16. I just like to look at, if I want to set a support and resistance indicator, I like to set it at 16. That gives a pretty good, and like I said, there's a new feature in the charts for support and resistance, and that's called, it says back. Let's turn one on here. Yeah, right here. There's a little field. There's step, which I don't know why it defaults to 100. I got to fix it. That's ridiculous. I like 16. Ignore this thing called sensitivity. Ignore that. That doesn't do much. It used to, but not anymore. But there's this new field called back. That's where you want to measure it from. See, the problem with measuring support and resistance from the chart right now is that it won't show you that it busted through support. I mean, it won't show that it busted through resistance or support. But if you do back 1 bar, that'll at least give you a better feel. Okay, for example, in this case, let's go back 3 bars. See how that changes? Don't let my little lines I do there confuse you. If I go 3 bars back, that support and resistance changes to the old support and resistance. Now, see that in this case, we can see that it busted through. I've really wanted this feature for a long time on the support and resistance. Hope that makes sense. Okay. Let's see, next question. Yeah, it's a whole series of audio's out. I hear noise. I know. I was getting the same thing on my end, and I hope I paused long enough for it to be good. Somebody pointed out that one issue could be, I think I was talking about a trade that worked, could be not because of stock specifics, but because of the market environment during that time. Well, yeah, that's true in all cases. The market is senior to everything. You can't, if you try to buck the market trend, you're going to usually be in trouble. But by the way, but that's only true to some extent. One reason I showed BBRY as that put option, because that worked in spite of the market moving up. And that was my point. And so that was a very powerful move on the part of the signature indicator. Somebody asked me, what is the frequency of the best indicator column value updated for each stock? I mean, how many times it hit? I think that's what you're asking. To get that number, it varies from stock to stock, but we have a minimum threshold. I believe it's 10. In other words, it has to be a big enough sample, otherwise the data is too inaccurate. I believe it measures about 9 months of back data on a 15-minute chart, so it can do 15-minute increments. And I think it has to have 10 hits to be a valid score, which, by the way, is why some stocks have zeros, because they don't have enough hits on any of the indicators. They just kind of meander around, you know. Somebody says, can you filter it based on average daily volume, average true range, etc.? Well, you can in PowerScan, but I think. But in this product, no, you can't filter on those. You're just going to have to eyeball that. Like, for example, you could filter right now average daily volume by going to preferences. See here, preferences, minimum daily volume, you can actually enter a number. And then all stocks will be filtered by that. By the way, that's only in the master list. Whatever you enter into the into your watch list or like your signature list, it doesn't matter what preferences is set at. You're going to have those in your list no matter what. But if you want to screen by that in your main list, you can do at least volume with preferences. Leon says, is asking something about so many bars. A bar is what is a bar is your unit on a chart. If it's a daily chart, a bar is 1 day. If it's a 5-minute chart, a bar is 5 minutes. It's that simple. I think when I was demoing something, somebody's asking, isn't it showing indicator number 4? Yeah, it was at that moment, but I was showing what was happening just a day ago. That was a whole different thing. Yeah, right now, remember, everything's showing right now is as of today's close. I think one of them I was showing, yeah, it was showing indicator number 4, but I wasn't concerned about the current state of the stock. I was showing a past trade, I think. Somebody says, how far back does the data test the results? I believe it's 9 months. It's somewhere about between 9 months and 12 months. You know, contrary to what a lot of people think, you don't want to go too far back on this testing because the market changes its patterns. You know, it changes its tune. The farther back you go, the more useless the data becomes. At least that's been my experience. As a matter of fact, I'm considering tweaking the algorithms to add weight to the more recent data. You know, that's how the exponential moving average works, is that the closer you get to current time, the more valuable, I guess is a way to put it, the moving average is, the more important. So when the exponential moving average is computed, it actually adds weight to the most recent bars. I'm seriously considering that in the back testing because what happened 2 weeks ago is far more relevant than what happened 2 years ago. Somebody asked you, can you filter the main list? Well, yes and no. If you're talking about optionality, yeah, you filter it by sorting by score. Okay, here's how you filter the main list. It's very simple. Right now we're on the main list, right? If I click on the score column, I'm sorting by score. Okay, so there's your top score, and it's going from top to high to low. Now, you say, yeah, but I only care about XYZ. In that case, you go to filters. Let's say you only care about big buy volume. Select that. Now you see the top scores, but they're only from only if the big buy volume tripped. That's how you quote unquote filter the main list. If you want to get way more specific and have your custom highfalutin filters, you use PowerScan. And by the way, if any of you have figured it out, eventually where we're going with all this, eventually, is going to be one giant master product. There's not going to be, optionality, PowerScan, midnight review. Eventually, there's all going to be merged into one product. Not as one big giant complex screen, but one nice master workspace with little modules you can plop onto your workspace. You can do a PowerScan module, midnight review module, charts, whatever. That's going to be sometime soon. That's going to be a whole major revamp. And don't worry, any of you guys that have bought the stuff already, that revamp will cost you $0, as long as you've bought each little component already, all right? So don't panic in that department. Somebody says, explain the hit colors and numbers again. Okay. Got to go to signature for that. The colors to happen to be blue, green, yellow, red in that order for 1, 2, 3, 4. But you don't need to remember that because there'll be a little tiny number. So if it's highlighted at all on that left column with a color, that means it's one of the 4 hits. By hits, it means whether or not that stock has that indicator right now. And in this case, they all have 4 best, okay? Remember, it measures I think 30 or 40 indicators on these guys, and it shows you the best 4. And it'll give you those details down in this box here. So it's 1, 2, 3, 4, and they're all from highest. The number 1 is the highest percentage gainer. The highest percentage of success. The second one is the second best, third one is the third best, fourth one is the fourth best. It'll tell you which one is hitting right now in that column. If it's blue with the number 1, that means that's its best. NTAP, for example, I'm clicking it right now. Its best indicator is big buy volume, at least double its normal volume. Oh, I'm sorry. In this case, it's I have the short side selected. Whoops. That means when it's big sell volume, it's actually fallen 100% of the time. Unbelievable. Is that true? Is that really true? It looks like it. It looks like it. Yeah. Here's a good example right here. Right there where my crosshairs are is big sell volume. Look at that sucker crash. Yeah, that's probably true. Everywhere I'm looking at where I see big sell volume, I see a 2 to 3 day downslide in this stock. So yeah, I had short selected. So by the way, you know you have that selected. See, look at these results down here. All the percentages are red. That's a clue that you have short selected. So let's select long. We get a whole different list. It's saying this one here, big buy volume, is its best indicator. And it says it's tripped right now. Oh, well, I digress. Anyhow, that's the answer to that. Okay, somebody's telling me their watch list is not being saved. That's going to drive me crazy. They're saying they're playing with it. It doesn't save it. I don't know what to do about it. It saves for me every single time. But I've heard some people tell me that. Not all, but some people. I don't know what's going on there. Is that a Mac version, by the way? I have to reproduce that. And I can't reproduce that problem. That not saving watch list or not saving the new signature list. Yeah, you just said so. You're using Mac. Oh man. Well, we'll deal with that later on email or something, because I got to figure out a way to reproduce that. I don't know why those aren't saving for you. Yeah, somebody's making a comment here. If your hold is only a few days, though, you're better with just out of the money calls, because there is less delta if you are wrong. Time value will not come into play with 3-day hold. Well, yeah. See, all those kind of things you have to consider. You have to consider your tolerance for risk and all that sort of thing. And also, a very important thing is to consider what kind of move you actually expect in the stock. Because a good, solid move in the stock in the money is always going to overwhelm any other factor. A good example is VXX. Like if you look at VXX on the options list, which is one of my favorite guys to trade because it moves so much. But the fact that it moves so much, why am I not showing VX? Oh, because I only have big buy volume. Duh. The fact that VXX moves so much is in itself an issue with the options. You see, on the VXX options, it seems no matter what you click on, it indicates a huge disadvantage with this table on the right. You see, they're all red almost every time. But the reason for that is because of its volatility. You're paying an extra premium because it makes such big moves. Sometime soon, I'm going to have to figure that out in the equation somehow. If I can compensate for volatility, you'll get a way more accurate reading on your advantage and disadvantage. Like the reason, okay, VX, here's an example. I don't think I've ever seen a day, unless the market is absolutely dead sideways, I don't think I've ever seen a day when VXX did not go up or down 4, 5, 6, 7, 8%. And so with those kind of daily moves, you're going to be paying really big premiums for almost any option. And that distorts the this nice little table I've done for everybody. So in that case, until I figure out a way to consider volatility in the equation, you just got to look at it relatively. In other words, look at the relative numbers, the various strikes, to see which one is the least red, I guess, if you want to trade it. And other considerations too, like how long you're going to hold it, what's your tolerance for risk, and all that sort of thing. Can you trade weekly options? Well, yes, of course. In this program, you can paper trade them. They're weekly options if they expire on the given week, and you know that by looking at the expiration dates on the table. Somebody says they're glad I added the back field for support resistance, and they wish it was in PowerScan. Well, I'm going to roll it into PowerScan as soon as I get a chance. It's not that complicated. Okay, somebody here says, how do you explain a stock with a 90 rating that suddenly drops to 50% or less? This occasionally happens. Any advice? Okay, I get this a lot. Okay, this is why I emphasized earlier in the show. The rating is the result of a filter that tripped, and it's the stock's track record against that filter. If the filter no longer is true, then the rating disappears. There's nothing any of us can do about that. You've got to, you can't look at these ratings as some kind of crystal ball, red light, green light thing. I mean, I get this all the time. I get, Gar, I don't understand. It was 99 and now it's 0. That's because when it was 99, a filter found it, and that stock gains 99% of the time whenever that filter is found in the past. But what if the filter is no longer true? I mean, we can't control that sort of thing. I mean, a really obvious example would be the filter gives it a 99 right now, and then in after hours, the stock announces earnings, and it plummets to hell. I guarantee that filter is not going to be true in the morning. So that 99 is going to go to 0. It can only tell you what's happening now. Now, if you really want to know what it was any given time of the day, you can look at high score. See, this column here is high of day. That's the highest score it hit for today. You see, look, this stock here had a 99 sometime today, and right now the score is only 49. That's because there was some filter that tripped earlier in the day, and then it's not true anymore. I don't know how else to explain. There's really nothing we can do about that. These are going to move around, which is, by the way, why you use human judgment. Why you can't just take this as a crystal ball. Somebody asks, have you assessed combinations such as V-bottom with a hammer may be more reliable than V-bottom? Yeah, you know, that's a good question. You know, have we back-tested combinations? Well, yes and no. That's kind of what GT Pro and Optionality do. They back-test filters, which are by definition usually combinations, right? The problem with combinations is I really wanted to do that. Like, I'd like to try, like you said, say V-bottom plus hammer, or how about, you know, EMA crossing plus MACD histogram, that sort of thing. The problem with that kind of testing is it's hard to get a large enough sample. And in other words, given, I say, a year's worth of data, and like I said, I don't like to go too far back further than that. Given a year's worth of data, it's really hard to find enough hits for a combination of indicators. Like, it's really hard to find, like, you know, indicator 1, 2, and 3 all happening at the same time. There might only be one hit the whole year, or maybe 2. You see, that's a problem, because we can't get a large enough sample to know. Your best bet for that kind of data is just to take a look at the general top 4 indicators. That might give you a hint as to what kind of combos to look for. Only a hint, though. Okay, somebody says, hey, Guard, do you mainly use this at end of day? I notice that the scores change constantly during market hours. Yeah, I just covered that. Yeah, no, I don't use it end of day. I'm using it end of day right now because I have no choice. The market's closed. But, yeah, they change a lot during the day because the data changes. The data changes every 5 seconds. Like I said, nothing we can do about it. You know, here's the deal. There's a lot of programs out there that claim they rate stocks and they give you patterns and setups and filters. Almost all of them are end of day only. And so if that's the case, of course they're going to be stable. I mean, those scores are going to stay true all night long because nothing has changed. But our stuff's the only thing around, or one of the few products that do real-time scanning. And so if you're doing real-time scanning, I got news for you. Let's say a stock's breaking out. Okay, what does that mean? Stock's breaking out means it moves above resistance. Let's say that gives it a really high score. What are we supposed to do if the stock falls and goes below resistance now? What are we supposed to do? Obviously, it can't have the same score. You see the problem? I mean, it's not really a problem. It's just you have to understand why it does what it does. Conditions change, the pattern changes. This thing is to locate specific setups for you to take a look at and to get some good ideas. It's not there to say, ooh, buy signal. This product does not have buy signals. It has take a look at me, maybe I'm a good trade signals. I'm going to be pounding this fact home until everybody gets it. Today's buy signal could be tomorrow's sell signal, you know, or it could be the next 15 minutes sell signal. Mbe is asking, explain the hit section 1, 2, and 3 again. I think I already did twice, but once again, I'll do it one more time. Every stock is measured for its 4 best indicators. Number 1 is its best performing indicator. Number 2 is its second best. Number 3 is its third best. Number 4 is its fourth best. When the hit column is lit up, that means that that indicator is true right now. Which one of these 4 I'm trying to get the audio back.